Hey guys, welcome back to another trading video. My name is Akil Stokes, Forex trader, trading coach, and one of the co-founders over at tier1trading.com. For you guys that are on YouTube, typically you see me each and every weekend for my Trading Edge video where I give you a look around the markets, showing you the best trading opportunities that are on my radar. But today I want to do something a little bit special and well, share with you a random video of a conversation that we had in our live room today talking about trade entries. Now, this is more reason that you need to not only be subscribed, but you need to have that notification bell hit. That way, the next time a video like this comes out, you don't miss it. Also, I don't do this enough, but I got to shamelessly promote this. If you're interested in learning more about trading, more about our platform, or even just joining us in the live room and spending a few hours each day with professional traders and a great network of traders, make sure you check out our 14-day trial on the website. There's no contracts, there's no rebilling, anything like that. You just get on, you spend 14 days, you learn some stuff, you take advantage of some educational resources, and hopefully you come out a better trader than what you were when you came in. Here's the best advice I can give to anyone that takes up this offer. The first thing you should do after you sign in is introduce yourself to our community of traders. Trust me, that is going to be the best resource you will have. Not only will they be able to answer a lot of questions that you have, but they're going to get you acclimated. They're going to get you set on the right path to take advantage of your 14 days. So there's a link in the description box if you want to set yourself up with it or just learn more. And I hope you guys enjoy this video. Before we get started, do me a favor, like the video. Of course, share this. That's a massive help to what we're doing here over at Tier 1 Trading. And of course, if you have any comments or questions or anything, just want to say hi, feel free to leave a comment below. All right, hope you guys enjoy. Got a big reversal here. This would have been an example of reversal that you would have hated. Because unless you're a trend following trader, I don't think you would have been able to trade this. Obviously, you see big momentum, high momentum bullish candle, two indecision candles, followed by this red one, right? And many of you are looking at this and saying, man, big high momentum bearish candle, that's a good sign. Why would it also be a bad sign? And obviously, just a disclaimer, ECB press conference in 15 minutes. Probably want to avoid all euro pairs. Yeah, it moves so much lower that all it's doing is decreasing your risk and increasing your risk, and decreasing your reward. If you're looking for, again, if we're looking at 150.20s as that ultimate destination, right? Imagine your normal setup if you would have gotten involved somewhere here in the pullback. You're looking at something like that for your reward, looking at something like this for your risk, and you're like, man, that's a pretty darn good risk reward, Akil. I like that, right? Then the reality is, when you get that lower close that completes down here, all of a sudden, right? Because your targets and stops don't change, right? All of a sudden, all of this is taken from your reward. What's taken from your reward is added to your risk. All of a sudden you're not in a very good situation. So those are kind of a good example sometimes when like the aggressive trader benefits versus the conservative one. The conservative one that needs to look for that confirmation. Sometimes that confirmation happens, the move goes and the train leaves the station. And you're like, missed it, right? Now, there is a way, and obviously this is much easier in hindsight. This is a very aggressive way. I don't personally trade this way. I can see myself going to this way in the future, though. And by future, I mean like 5 years from now. What is a way you can kind of get the somewhat of the best of both worlds? What's another entry technique you think we can use? We've spoken about it before. We haven't spoken about it in a while. Fib entry? Oh, fib entry. I'm like, oh no, he said a word I don't know. He said a word I don't know. Nope, not fib entry. Look, you guys know I'm dumb already. It's cool. I've got nothing to prove. I've got 2 degrees. I guess that says less about the college than me, right? Really? You have 2 degrees? They gave you 2 degrees? Yeah, buy one, get one free. I bought one for 4 years. They gave me the 2-year one for free. The 2-year one that took 3 years. because I had to wait a year to take the test again. So something you can do here, right? Instead of waiting for the confirmation of the close of this candle, no other guesses? I thought you guys would get this. No other guesses? Instead of so it's somewhere between waiting for the close of the candle and entering at the doji, right? Put a sell stop below the doji. It's not going to let me show you it because my screen's not moved over, but here we go, this. See these dojis, put a sell stop below the doji. Does that make sense? Then as soon as you get that push lower, boom, you're filled on the way lower. And again, it takes you from, again, it gives you an entry more like the first one we talked about, like this, than that second one like this. Now, obviously, this is much more aggressive because what else can certainly happen, right? You can have a candlestick that wicks down here, gets you filled, and then explodes in the opposite direction. So again, that's, there's never a best way. We talked about this yesterday. It's all a give and a take. But that is something that you can do. That is something, again, I am considering that. I don't think I'll ever become so aggressive that I use limit orders. I like confirmation. But I do think the better that I get with identifying opportunities, and I have got better at identifying opportunities, the more aggressive I'd like to be in my entries, because I have a lot of trading situations, especially being the type of trader I am. I have a lot of trading opportunities that I cannot get involved in because of risk reward. And we'll take it back if we go back to Canada Swiss, for example. And again, this has a lot to do with my trading style. So Canada Swiss, let's go 4 hour, right? So we talked about how I trade. We should have taken a look at this on the range bar, right? We talk about how I trade, right? Aside from the range bar charts, do I shoot for extensions with my targets? No, I need, because I'm a counter trend trader at heart, that is allowed to trade trend continuation situations, right? I need to shoot for targets up here, right? What that does is it significantly decreases my reward. And because it significantly decreases my reward, and because I need to keep a 1-to-1 risk reward ratio, right? It puts me in a situation where if I can't get a good entry, I typically can't be in the trade. So let's take an example and look like this. Let's say we want to get below. Let's say I want to have my stops below this level. This was that main level we looked at. This is where my stops want to be. I'll go ahead and make that red. I'm going to write this down. Good lesson on alternative entries. I know my targets are up here in green, or what's soon to be green. I know my entry or my stops are down there in red. What's an easy way to find out where my minimum entry can be at, assuming I need a 1-to-1 risk reward? What's an easy trick? And again, this is just a loose projection of stops. I don't know if they would actually be here. Yeah, take your Fibonacci retracement. I need a 1-to-1. So I can take my Fibonacci retracement from my target to my stop, or from my stop to my target. It doesn't matter. I know that right here in the middle, right? This is the midpoint of this move. So anything above this move will give me a less than 1-to-1 risk reward. Any entry below this move will give me a greater than 1-to-1 risk reward. Does that make sense? Should be pretty straightforward. Yep, if it's a trend continuation trade and you get stopped out and it's still within the zone and you get an entry signal, yep, take it again. If you get caught stealing from the store, go back in and take it again, right? So let's say I get a situation where price action comes down here. And let's say I'm looking for a 3-bar reversal, right? I like that setup. We get a high momentum bearish candle right here, right? We get a nice doji. Let's even bring it a little bit lower. we're really in the zone, right? We get a nice little doji candle in here. And I'm like, oh yeah, I'm ready for the trade, baby. High momentum candle, doji indecision. That RSI has swapped, giving me some hidden diversions. This is my grade A setup, right? I'm ready to roll. I'm waiting by my clock. I'm saying, okay, one more candle. We got 48 minutes till the 9 o'clock candle closes. Let's do it, right? Getting all excited about it. And I'm watching this candle do this, right? And I'm like, okay, all I need is a higher high, higher close. All I need is a higher high, higher close. I'm like, oh yeah, we're going to get that higher high, higher close. We're going to get that higher high, higher close, right here. Get up, baby. Come on, get up there. Get up there. Do you guys yell at your charts at all? Or is this just weird? Is this normal or weird? Normal? Huh? Okay. Yeah, come on. Get up there. Attaboy. Come on, go get him. And then we get to this level. We're like, oh yeah. Here comes the entry. Here goes the entry. And then we get up too high. No. Come back down. We don't want it to get too far away. Come back down. And it's like 8:59. Like, come on. The market's doing that wiggle dance because that's what it does at the end of every hour. Come on, baby. Then it closes right here. Damn it. And then, of course, what always happens is it's probably like Cody or someone on the chat. Like, hey, Kill, did you enter the trade? Shut up. What do you mean? Shut up. A couple other people chime in. Cresswell chimes in. David chimes in. Dude, we're long CAD Swiss. It's moving. All of us are long. Everyone's doing it. Yeah, shut up. Not everyone's doing it. You shouldn't be so selfish. What do you mean? You gotta be an idiot not to be involved. Yeah, you do. Follow your plan. Hit Greystone up. Greystone's like, yeah, I'm in it too. Damn it. Come on, Greystone. Right? Because it's no longer in that 1-to-1 ratio, so I can't get in. So a way around that, and this happens a lot, again, because it's such a tough situation. Because what do we know about trends and trend strength, right? The stronger the trend, the pullback. Stronger the trend, the shorter the pullback, right? The weaker the trend, the deeper the pullback, right? So a lot of these strong trending moves, right? Like this right here, this is probably a perfect example. Actually, I should have used this one, right? Because your higher high, higher close came right here. Stops would have had to go behind here. This probably wouldn't have been a 1-to-1 at all. It's probably a great example. Darn it, Akil. But your better moves your stronger trends don't pull back that much. But because of how I trade, I'm not a trend continuation trader. I'm a counter trend trader at heart that has kind of found a way to trade trend continuation setups without kind of messing up my counter trend ideology, right? It's hard for me to catch these good moves, so I miss a lot of them. So not a way around that, but an alternative is to say, hey, instead of waiting for that higher high, higher close, which could come up and violate that level, soon as I get that doji or that pin bar, whatever it may be, right? The second third of the 3-bar reversal, I guess you can say, right? I use a buy stop. And that way, as soon as the market crosses that level, boom, I'm involved. So if that candle goes up, I'm in it. Now, again, what you're doing here, because it's a give and a take, is what am I sacrificing? What am I sacrificing to be in the trade, right? What I gain is the ability to be in the trade faster at a better price point. But what am I sacrificing? Confirmation. Yep. And what is confirmation? Confirmation is another word for. I keep my gold in a 1414 is the password to my. Oh crap. Safety. It's not 1414 if you guys ever break it. I don't actually know what it is. That's a problem. But yeah, I'm sacrificing safety. But that's the give and the take. That's a risk, isn't it? I mean, that's anything in life, right? Whenever you go for something, the comfort zone, right? You're sacrificing the safety of a comfort zone to try and learn how to trade. But my son is his gold anyway. So I just can't give him to him now because he's gonna spend it all on Legos. We're teaching him a lot about money, but he's still at the point where he's like, I'd rather spend it now. I'm like, yeah, but if you save it, you can have a bigger one later. Yeah, but I want it now. I'm like, okay, whatever. So we'd have like thousands of dollars of Legos in the house if I ever let him get that gold. He'd probably just give it all for one Lego because he doesn't know how much gold is worth. So he'd take like one little brick and be like, oh, so I have one brick. This is like $1. I'm like, no, please don't. You gave him 5 and you got 1. No. But anyway, does that make sense, guys? So again, I can see myself going to that approach. Just as I've gotten more aggressive. If you think about me, and hopefully this will provide you some perspective for you newer traders. When I first started trading like good, not first started trading, that was all bad. When I first started trading good, I couldn't enter anything without a double bottom, with RSI oversold, with diversions. If I didn't have all 3 things, I couldn't enter a trade. That's how conservative I was. And that slowly went to not needing, all of those requirements, to kind of went to where I am right now, where I can take not single candlestick formations, but multiple candlestick formations for entry. So it's evolution. And the better you get at predicting areas, the better you get at trading and in your analysis, the more aggressive you can become because it evens out, right? Think about this. If you are a new driver, you're probably driving pretty slow because you're still not fully in control of the car. So you want to be a little bit more cautious to avoid danger. For you guys that have been driving for years and years and years, right? You can push the pedal a little bit and go fast because you're skilled. So it evens out kind of that risk because you're just better at what you're doing. You're just more skilled. So you can take more risk and be able to control it versus someone that's brand new that's trying to be very, very risky. I think that's where many of us get into trouble. We want to be less skilled and more risky, which doesn't make sense, right? You don't want to be less skilled and more risky. You want to be less skilled and less risky. And then once you're more skilled, then you could be more risky because it's all about that balance. So that evens things out. All right. Any questions on that? We got 1 minute until unemployment claims. We'll probably watch the first little bit of it. Unemployment claims, ECB press conference, although I don't think the press conference is going to show us much until the later half, the Q&A. We have Canadian GDP as well. So we may see some fireworks in the market. We'll stay around for like the first minute of that, then we'll take our break. But any questions about anything we just went over? Is that a cool little lesson for you guys?